Welcome to today's What Will Move the Market show. I'm your host Prem. It's Thursday, October 23rd, 2025, and here is everything you need to know as the markets open for today. US markets stumbled on Wednesday, snapping a record-setting streak as trade tensions with China resurfaced and mixed earnings weighed on sentiment. The Dow Jones fell 345 points or 0.74%, the S&P 500 dropped 0.53%, and the Nasdaq bore the brunt, declining 0.93%. Netflix shares plunged nearly 10% after earnings missed expectations due to a Brazilian tax dispute. Texas Instruments tumbled around 6% on disappointing guidance despite beating third-quarter estimates. The semiconductor sector felt the pain broadly, with AMD on Semiconductor and Micron all down about 3%. Adding to market anxiety, reports emerged that the Trump administration is considering new export restrictions to China covering everything from laptops to jet engines, a direct response to China's rare earth mineral export controls. This overshadowed positive vibes from earlier optimism about potential US-China trade talks. In a major policy shift, President Trump announced significant sanctions on Russia's two largest oil companies, Rosneft and Lukoil, pushing crude oil prices up more than $2 a barrel. Tesla earnings after the bell showed record revenue of $28.1 billion, but profit fell 37%, missing expectations at 50 cents per share, versus the estimated 54 cents. Indian ADRs showed mixed performance overnight. HDFC and ICICI ADRs have moved 2 to 3% since their Monday close. IT ADRs have been mute. Asian markets opened under pressure this morning, tracking Wall Street's losses. Japan's Nikkei tumbled 1.3%, retreating from recent record highs. Hong Kong's Hang Seng dropped nearly 1%, while Shanghai Composite edged down marginally. Now here's the big story of the morning. Gift Nifty is trading sharply higher by over 400 points from its previous close, currently hovering around 26,295. This massive gap up indicates the Nifty 50 could open near the 26,250 level, just shy of its all-time high of 26,277 hit in September. This surge comes despite weak global cues, driven by optimism around a potential India-US trade deal. The headline dominating markets is the breakthrough in India-US trade negotiations. Reports suggest Washington may slash tariffs on Indian exports from the current 50% to just 15 to 16%. In exchange, India would gradually reduce imports of Russian crude oil and open up agricultural markets to non-GMO American corn and soy meal. President Trump confirmed speaking with Prime Minister Modi on Diwali, saying they're working on some great deals. The potential agreement could be announced at the ASEAN summit later this month. This is massively positive for Indian exporters in textiles, pharmaceuticals and engineering goods. Meanwhile, Trump's fresh sanctions on Russian oil giants Rosneft and Lukoil sent crude prices surging, which could pressure India's import bill in the near term. The ongoing US-China trade friction with new tech export restrictions adds to global uncertainty. After a two-day Diwali holiday break, Indian markets are set for a blockbuster opening. The Nifty closed the Muhurat trading session at 25,869, gaining 25 points. Bank Nifty finished marginally lower at 58,007. Foreign institutional investors have dramatically shifted gears. FIIs turned net buyers in October after 3 brutal months of selling, pumping in over 7,300 crore rupees in recent sessions. On Muhurat trading day alone, FIIs invested 96 crore rupees, signaling renewed confidence. This turnaround, combined with the trade deal optimism, is fueling today's expected gap-up opening. For Nifty 50, immediate support is placed at 25,700 to 25,600 levels. The index has been forming a consistent higher high-higher low pattern over 5 straight sessions. Immediate resistance lies at 25,900, followed by the crucial 26,000 mark. A decisive break above 26,000 could trigger a rally towards 26,200 to 26,300, which coincides with the record high zone. Bank Nifty finds support at 57,800 to 57,500. On the upside, watch 58,500 as immediate resistance, followed by 59,000. The index has been outperforming, hitting fresh lifetime highs, with PSU banks and private banks both participating in the rally. Technical indicators including RSI and MACD remain in strong bullish territory for both indices. Crude oil jumped over $2 per barrel after US sanctions on Russian oil companies. Brent crude settled near $63, while WTI approached $60. This spike could pressure India's import bill, though the potential boost to Russian crude discounts might offer some relief. Gold pulled back slightly to $4,089 per ounce, down 0.27% after Tuesday's sharp 7% correction from record highs. Silver also retreated 0.52% to $48.24 per ounce. Both precious metals are consolidating after their recent spectacular rally, with silver still up over 43% year-to-date despite the pullback. Today's session could see explosive volatility given the 400-plus point gap up in Gift Nifty. While the trade deal optimism is genuine and powerful, be cautious of profit booking at higher levels, especially near the all-time high resistance zone. Consider booking partial profits if Nifty approaches 26,200 levels on the first attempt. For fresh positions, wait for the initial euphoria to settle. If the index sustains above 25,900 in the first hour, you may consider going long. Stay tuned for the evening wrap and send in your questions. Happy trading and welcome back after the festive break.